Good afternoon, everybody, and welcome back to the channel. Today we're gonna look at 1911 Gold Corp. This is a stock that has been promoted by people online like Don Tourette. He has been talking about this stock a lot, and somebody in the comments asked me yesterday to look at this stock and see what I think of it. So this is my analysis. The company is traded on the Toronto Venture Exchange under the ticker AUMB and on the over-the-counter market in the US with the ticker AUMBF. As always, we're going to look at the management, the project, the capital structure, the balance sheet, recent news, and my opinion. Starting off with the management team. The management team and the board of directors of this company is surprisingly small. The management team only consists of 4 people. We are going to talk about 3 of them today. We're going to talk about the CEO, the VP of Exploration, and the CFO. Starting off with the CEO, Sean Heinrichs. He is a senior financial expert with some industry experience in mining. And the industry experience that he has isn't top-notch, in my opinion. He began his career at Ernst & Young, which is an account or a consulting firm. It's pretty well known. They do a lot of consulting in finances, and he worked with some consulting for the mining industry. So that's where he got his first steps into mining. He is the ex-CFO and the ex-CEO, which of course is kind of strange. How can somebody be a CFO and CEO? I don't know, maybe he got promoted afterwards, but he was that of the company Veris Gold, which filed for bankruptcy after the bull run in 2011. They filed for bankruptcy in 2014 and dissolved the company in 2015. He is also the ex-CFO of VMS Ventures, and it was sold for approximately $28 million to another company with a 50% approval rating on the sale. So there was definitely a little bit of a discussion within that company approving or disapproving the sale. He is also the ex-CFO of Group 11 Resources. That is a exploration company. Some of you have probably heard of that. They are currently exploring for gold and silver. They have a market cap of about 80 million and 250 million shares outstanding. So it's a run-of-the-mill junior in that sense. One thing I do want to note, and this might be a very small detail, but it is something that I picked up on, which I do want to share, is that in this picture that the CEO has on the website, you can see that his suit that he is wearing is not lining up with the collar of his shirt, which it does not only annoy me to see this, but it is a level of detail in your presentation pictures that is lacking with this picture. So if I could advise one thing, at least, it's change this picture. Do either a picture of this guy in just a fully suit that fits, or use a picture of just his face, because this is just a lack of detail that I don't like seeing on multi-million-dollar gold websites. You know, that comes from a guy who gives presentations online with, as you can see, spelling mistakes in his presentation. So who am I to judge? But I am gonna judge anyway. Next, we're gonna talk about the VP of Exploration, Michael Libera. He has 30 years of exploration, and what I could find on this guy is that his experience is extremely broad. He has worked with base metals and precious metals in South and North America. And that tells me that there is a lot of experience in this man, but I don't know how defined his experience is with the project at hand. He is the ex-director of New Gold Incorporated, and he worked there on discovering a 3 million ounce low-grade gold deposit which also contains 8 million ounces of low-grade silver. And another thing that I do want to note about this management team is that on the website they make it look like Michael Libera has been involved in a 10 million ounce gold deposit, but that is not true. It's a 3 million ounce gold deposit with 8 million ounces of silver, and that is definitely a very different story. So I also don't really like that detail in this management presentation. Praising the success of something that wasn't there. Turning our attention to the CFO, Carmen Amazek, I'm gonna butcher that name, Amazekuta. I'm sorry. Please let me know how to pronounce your name properly next time. She has 15 years of experience in the resource sector. She has worked previously for PricewaterhouseCoopers, which is also a consultancy firm on the same level as Ernst & Young. She was a CFO and a controller for multiple listed companies, but there are no names given, so I couldn't check any of her background. What I do think is interesting about this CEO team is that none of them have real experience with developing or operating a actual gold mine. And 2 of the people involved in this project are professional consultants. I don't know if they do have that much experience in mining, but I guess we will see in the future. The board of directors also is very small. It consists of 5 people, one of which is the CEO, so it consists of 4 people. The CEO being on the board of directors is always a bad thing because that means that the CEO can make a plan to raise his own compensation and then vote on that plan with the directors, and I never like that. The chair of the board is Gary O'Connor. He has 40 years of experience in the mining space, and he is the ex-CEO of Montana Gold, which is a 140 million market cap gold producer. He's the ex-vice president of Dundee Resources, which right now is a $5 billion company, but he was the ex-VP of Dundee Resources back in 1990, if I remember correctly, which at that time the company was only worth a fraction of what it is now, but there he was responsible for the due diligence of the investments. So this man has definitely got some due diligence experience, and that might be the reason why he is on the board of directors of this company. Then we got Mike Hoffman, which has 30 years of experience in engineering and mine operations. So where the entire board and management does lack experience in mining operations, the experience does come in through Mike Hoffman, which has also a very broad-based experience working with coal, base metals, precious metals, and potash in numerous mines, but in Canada. So there is not much extremely detailed experience. There is very broad experience in this board of directors and this management, but maybe together they can all just figure it out. One person that is on my radar that I like as well is Anna Ladd. She has 25 years of financial experience, but she is the ex-CFO of McEwen Mining. This is a mining stock that I own myself, McEwen Mining, because I do like the McEwen Copper project. I think it's an extremely interesting case and an extremely interesting project run by an extremely interesting man, McEwen, Mr. McEwen himself. And she is still the CFO and the director of McEwen Copper. So seeing Anna on this project is definitely a plus for me. This is a very competent woman. Then we have Blair Schultz. He has also experience in finance. He was the interim CEO of 1911 Gold, and he's an ex-hedge fund manager. So you can see there's a broad-based mining experience. There's broad-based financial experience, but hopefully this project isn't all too complex for them to figure out. So let's dive into it. The project that these people are running is the True North complex, and you can see a picture of it here. It is located in Manitoba in Canada, and it is located along the Canadian Highway number 304. We are going to dive in where exactly this project is in a second. The company does own these mineral claims, as you can see here. I'm gonna have my mouse go across the outlinings of it. And you can see that all the mineral claims have different colors, and that means that this project has been growing over time. So in 2011, they bought the first claims, and in 2022, they bought the most recent claims. This company, by the way, for some people who are wondering, this company is called 1911 Gold because this complex has been discovered in 1911, and it has been producing gold since 1927. That's why it's called 1911 Gold. The company currently owns a milling and a processing complex on site. It is located right around there. We're also going to zoom into that later on in the presentation. The mill is permitted for an operation of 1,700 tons per day and is currently configured to operate about 1,300 tons a day. The mill is currently not operating and the project is currently not producing gold. But if they were to restart this mine with the current configurations, you mine about a 4 gram per ton grade in this project at 1,300 tons a day, means that you can maximally produce about 61,000 ounces of gold a year if the mill is running 24/7, 365 days a year with no downtime and at a consistent 4 gram per ton grade. So the mill that they got is relatively small, and this project, its gold output will also be relatively small. But some people will say that is compensated by the fact that their exploration target is so big. As I stated earlier, this mine has been producing since 1927, and it has been producing till 2017. That's when the mine shut down. That was around the bottom in the gold price, so that makes sense that you put the mine on care and maintenance. The company that owned this complex back in 2017 sold the entire company to Hecla Mining, but Hecla Mining didn't want this project and spun it out. They made a different company. That company changed its name to 1911 Gold, and that is the project we're looking at right now. This project has a current mineral resource estimate of about 1,144,000 ounces of gold at a pretty high gram per tonnage of 4.5 to about 360 grams per ton. So we're gonna zoom in now on the project itself and see what it looks like. Right here, we can see a big map of Canada. In the lower region, you can see where we are in Canada. We're located in Manitoba. I'm sorry. My pronunciation of English words is difficult. I'm Dutch myself, so please bear with me. But you can see on this rather big map that we are looking at, you can see that the project that the company owns is truly a very big project. It spans all the way through here. You can see that the Canadian Highway 304 is running right through this project, so the accessibility of this project is extremely good. That is obviously why it has been mined for so long. If we zoom into the project itself, we can see a more detailed image right here. You can see that this area in yellow has been lit up. That is because the company has a mineral lease on this project, which means that they are allowed to mine, they are allowed to own the resources from this ground, and they have mining claims along the purple mining claims that they have. All of this is owned 100% by the company. There are no royalties outstanding to anybody. So that is a pretty unique sight to see in this environment, honestly, because most projects have royalties. This one doesn't. They have a mill on site and they have a processing facility. So if we look at Google Maps and we zoom into the project even more, you can see this rather complex image. But you can see that the processing facility that the company owns is right there. You can see the highway running through the project. right there. And you can see some places that have been mined out, although most of this project right now is underground. And if we look even closer at the facility itself, you can see that it looks just like this. This is a image from the company itself. You can see the most important things right here are the mill, right there, that is connected to the crushing house, which get fed by the stockpile, the stockpiling area. And you can see already that the stockpiling area is about as big as a baseball field. I'm from Europe, we don't play baseball here, so I don't know exactly in my mind what exactly those dimensions would be, but for all the people living in Canada and in America, I bet that you will understand how big this is in your mind's eye. There are a couple other shacks and buildings on this place, and you have a waste rock pile area right there. Looking at this visually, we can already see that the processing facility is not a big one. It is a small processing facility. So let's say we said earlier that if this mill was running 24/7 for 365 days a year, you would be producing about 60,000 ounces of gold. Let's cut that back a little for care and maintenance and for holidays. So let's say that you're going to be able to produce about 50,000 ounces of gold from this facility. That on its own is obviously worth something. This mill is permitted. It can start whenever the company decides to start it, and they can start the operations back up. That is definitely worth something in this gold environment. But what are they exactly mining? To see what they are mining, we're going to look at this image. You can see the surface right here. The green line right there is the surface of this project. And you can see all these lines that go through this entire project. They go down and down and down and down and down. Earlier, I have stated that this project has been mined since the 1900s, since 1927. These lines are the existing mine shafts that are in this project already, and the red area are the ore that have already been removed and already been mined out. These purple areas and these blue areas are the areas where the company thinks there is still mineralization and there is still rocks left. So that means a couple things. It means that a lot of ore has already been mined, which proves that this deposit exists and which proves that this can be mined profitably. And that also gives the company direct access to the rest of this deposit. Because if we zoom in on the deposit a little bit, this wouldn't make any sense right now, and it didn't make any sense to me when I looked at the technical report either. But this is the resource that the company still thinks it has. You can see the light green area is the indicated resource, and the somewhat darker blue greenish area is the is the indicated resource. I'm sorry. The red lining is the resource that the company thinks that they can still profitably mine. And within that area, you can see here, they give a gold ounces per ST. I don't know what ST stands for, so you're gonna have to excuse me on that one. I have no clue. But what this image does tell me is that the more intense the color gets, the more ounces of gold per tonnage of per ST are in there. So you can see there's a very high grade there, there's a very high grade there, there is surrounding it a little bit of high grade, there's some high grade there. But what does this visually look like? Because this doesn't make any sense. I don't understand where this is right now unless you put it on the previous image. So what I've done right here is I took the mined out areas and I put the resource on top, and you can see that there is definitely a resource still right below where they've mined there, right on top where they've mined there, and to the sides and downwards. So that is where I believe and I think that this current resource still is. And if it is, if I'm correct in my assessment here, that means that the company has easy access to this ore. They already got all the infrastructure in place. They got the mill, they got the processing capabilities. So it would just be a um, a situation where you have to flip a switch. You have to get the mill back on and you have to start mining again. So that's why the lack of the mining experience with the current management might not actually be a problem, because this project might be very simple to mine. But who knows? Mining is very complex and everybody can mess it up. So we'll just see about that in the future. Other than the current mineral resource that the company has a very big land position, and they have been assaying and scoping that land position out. So they have gathered rock samples on this position, and you can see that all the yellow, orange, red, and purple dots are places where they have found gold in the rock sampling. So you can see that there's some low-grade gold there, there's some high-grade gold there, there is high-grade gold right there, and they have found some right over there. They have found a lot. Based on these results, the company has started a drilling campaign in 2022, where they have focused on that area, they focused there, and they have focused there. As far as I can tell, the company ran out of money in 2022, so the drilling stopped, and the company has been in some sort of hibernation. Recently, the share price of the company 5x'd. It went from 20 cents to a lot more, about $1 something. They have been spending a lot of their shares. They have been issuing a lot of their shares. They've been raising a lot of money, and they are currently drilling the project again. So what I guess that the plan is with this project is to start the mine back up, to get that high-grade gold out of the ground, where they at least know where it is, sell the gold, raise the cash, and start exploring this project even further. And I do believe that that is the reason why people like Don the Rat are so interested in this story, because there is definitely a very big land package which can self-fund itself in the exploration. But for the mine itself and for the processing capabilities of the mine, I don't know if this stock is definitely a buy. You would definitely buy this because you think that there is more exploration in the rest of this project, at least according to my views right now. Because if we look at the potential deposit value, we can see that they have about 1.15 million ounces of gold at a current gold price of $4,000 an ounce. You can see that the company has a expected buyout value of about $685 million. Of course, if this company decides to start producing this gold again, they will get a lot more than 685 million. But for the consistency of the valuations of these projects, I am going to use a 15% buyout value. If we look at the share structure of this company, we can see that there are currently 251 million shares outstanding, 33 million warrants, and about 11 million options for just shy of 300 million fully diluted shares outstanding. Currently, the share price is 66 cents a share. As I said, the company shot up in price, but also lost a lot of that spike again. So this is a very volatile stock. But given these datas, you have a current market cap of just above 195 million US dollars. We can see that Eric Sprott is invested heavily in this. He owns about 17% of the company, which is about 35 million bucks. You can see that insiders own about 5% of the stock, so that is very low. But you can see that institutional high net worth investors have 65% of the stock in their hands. 5% is for the management, leaving retail with 30%. And I don't want to point too many fingers anywhere, but if there is a very big promotional campaign going on by some influential people on Twitter, getting these 30% of retail investors to buy the stock, given the fact that big money and big institutional investors don't trade stocks that much, it can explain why the stock has suddenly popped up from about 20 cents to about a buck 20. And that also can explain why the stock has then dropped again. So it's definitely important that people who are going to invest in this company do understand the share structure of this company, do understand there's a lot of shares outstanding, and what they are actually getting when they are buying a share. Because what you're buying is this balance sheet as well. The company has not filed their most recent, the latest financial report, which means that the reporting is pretty old. On the 3 months ending on the 30th of July, we can see that the company has almost $1.3 million in cash. So you can see that the company has been broke for a while. They have liabilities of about 2.1 million. The liabilities on the balance sheet are a little bit higher, but I'm not counting some of the liabilities. I'm not going to go into it now, but these are the liabilities that I think that the company has currently got. We can see that the company has spent 400,000, well, about 400 grand in salaries, about 1.7 million in professional fees, and about 150k in share-based payments, and a 250k payment on office and administration. Couple things that are interesting here. The current company does own the mining complex and a lot of buildings, so that might explain why the office and administration costs are 250k. But that is a lot of money, especially since this company has been broke for a while. This is a overhang that will continue to bleed this company out, especially because these professional fees are this high as well. And most of these professional fees are due to two costs. Their fuel costs of about 850k and their mine maintenance costs of 600k. So you get 250k for the office and administration, you got 600k for the mining maintenance, and you got 850 grand for diesel fuel. They don't specify what they need this fuel for, by the way. This is just a statement that they make. I would love to know where they are spending all this fuel on, because currently the mine is not operating anything. So what do you need to truck? And why is it 850k? It makes it sound like this mine is operating at tons and tons and tons a day, but the mine isn't doing anything. So what are they spending all this money on? Very interesting and very important to know about this balance sheet is that this company has essentially been saved by the recent pop in the share price. Because if they didn't get this pop in their share price, they wouldn't be able to sell a lot of shares, and they would actually have been probably bankrupt by now, because the overhang on this project is very large. They are spending more than $1.5 million in just expenses that have to be maintained. You have to keep maintaining this mine, you have to keep the offices and the administration open, and maybe they could have reduced the diesel costs a little bit, but you know, since this mine is going back into operation, at some point you have to keep maintaining it, because if you don't, then the mine and the mill might not work when you try to start them up again. Because the company was broke, they have spent about $1 million in exploration, but they don't specify what they spent that on, so who knows how much of that actually went into the ground. You can see that they have an exploration to G&A ratio of about 70%, which is also horrible. That means that they spend more than 2 times as much on G&A expenses as on exploration, which I also don't like. In the 3 months ending on the 30th of July, they have raised about 2.5 million shares, giving them a implied yearly dilution ratio of only about 5%. And you can take this in 2 ways. You can look at it thinking that's a low dilution rate, so this company must be very diligent with its money. That's one way to look at it. Another way to look at it, which I prefer to do, is that this company was not able to raise any capital, and that this company was on its way to probably bankruptcy, but because they had this extremely big spike in their share price, they were able to issue about 95 million shares since the release of this financial report. Because if you are a diligent watcher, you can see that the fully diluted shares on this date were about 200 million. And if we go back, you can see that right now the company has almost 300 million shares outstanding. So the company raised 95 million shares in 3 different financings, which were all extremely complex. And I'm not somebody who calls a financing complex easily, but they are given out life financings with half a warrant, structured in a way where people pay different amounts of money for different kinds of shares, with, if I do remember correctly, different kind of voting rights as well. So this is a very complex offering. They've done 3 of these. They are currently doing another one for another 20 million. So this company is rushing to sell as many shares as they can at this share price, which I do understand because they were struggling financially earlier. So definitely keep that in mind, that the company has been raising a lot of shares and there is no sight that that will stop at any time soon. Meaning that the projected value of this company is a little skewed, because I'm going to use the dilution rate from their last financial report, while we already know that they are diluting by a lot more. But I'm willing to give them the benefit of the doubt here. I don't know if you should too, but that's on you. We can see that the value of this deposit is about $685 million. They have about 300 million shares outstanding, and at a share price of 66 cents, a dilution rate of 5%, you can see that your potential multiple in this stock is going down over time, of course, which means that you are essentially betting on this company to start mining this deposit and start bringing in cash flow sooner than later. But who knows how much money they still need to raise before they will open this mine back up again. Remember that the company does not have an economic study out yet. They do not have a feasibility study out yet. So there is no projection on whether this company is going to start this mine again, how much capex that will cost, and who is going to finance that capex. So in recent news, you can see that actually, for me, this is today. For you guys, this is yesterday, because I'm gonna upload this video tomorrow. You can see that the company is announcing to raise another $20 million in another financing. So where they've already done 2 financings for $13 million each, they are now doing another one for $20 million. This is a couple months after each other. So this means that the company sees an opportunity and is definitely putting in all the effort that they can to seize that opportunity. And that opportunity, of course, is the share price spike that has been created by the hype that has been in the stock. So if you're thinking about buying the stock, definitely understand that you are buying something that is extremely hyped and that the company understands, and they are selling their shares as quickly as they can. Furthermore, the company is still drilling the project, so they now have some money, so they're drilling again. They do hit some high grades over low intervals, which is typical for these kind of deposits where it's a very veiny deposit. So you're gonna see very high grades over very low intervals to try to understand where the veins are exactly. So when they start mining, they have a very detailed picture of where to go. They have also announced that they have got a grant from the government, which is always good, for about 300,000, which is about 3 drill holes. But it's more of a gesture that the government is looking at this project and thinks that they are interesting, more than the money actually means anything for a project like this. So, in my opinion, This stock is definitely increased in price recently, and the company is issuing shares as fast as they can, raising 30 million twice and raising 20 million right now, all in very complex offerings. So keep that in mind as well. It's not as clear cut as you just buying shares. There are warrants, there are different prices, there are strike prices, and there are financial tax benefits for the people who buy these shares. They have a pretty small remaining deposit, which they are currently not mining. And the costs to keep this deposit and to keep the mine semi-operational, to keep the mine maintained, are pretty high. So this company is going to bleed through this cash slowly and steadily until they have to raise again. I don't know if the fundamental problem is fixed, why this company couldn't raise any cash previously, but they are cashed up now, so this won't be a problem in the immediate future, but at some point in the future, this problem will come up again. The CEO, in my opinion, has questionable previous experiences at Explorcos. One of them went bankrupt, the other one got sold with half the people owning the shares disagreeing for a pretty small amount. I don't know, we'll see what his experience will bring in the future. They have a very high exploration to G&A ratio, meaning that they spend most of their money on G&A, on keeping this mine maintained, and having very little money left over for actual exploration. Maybe that has changed with the offerings that they've done, but we'll just have to see. If the company gets to a point where this mine is becoming operational again, this company will cash flow immensely, because mining 4 grams per ton gold and processing that, milling that in your own facilities on site is of course extremely profitable. So if they come to that point, then the issuance of the shares will probably no longer be an issue, because they will probably be able to self-maintain the costs that are going on in the exploration of the rest of the property. In the recent offerings, the insiders of this company have been buying as well, so that is a good thing to see. They currently have a permit to start the mill and to start mining again, so I'm definitely interested to see where they go. And the company is projecting to restart this mine in 2027. Hopefully for the current shareholders, this money will last until 2027, and this money will get them through the opening and the restart of the mine, so that they don't get diluted again. So in short, this company is definitely a play and a bet on the management opening this mine soon, and you were probably betting on the fact that there is more gold in the rest of this deposit and in the rest of this project. And with that, I want to leave it for today. I want to thank you all for listening. Thank you for the person who suggested me looking at this stock. I thought it was very interesting to see that it was so hyped up recently, and to see what it was actually all about. If you like this video, please leave a like and subscribe to the channel. And if you do want to see your own input, your own stock that you think is interesting in a video of mine, just leave it in the comments and I'll look at it. Thank you very much. See you next time. Bye bye.